Alrighty, folks, 2024 is right around the corner, and I thought, why not talk to the wonderful Anna Kelly about what she sees in her broken crystal ball as possibilities for 2024. Anna, how you doing?
I'm doing great, and I love that. I do say my crystal ball is broken, so it's it's hard to figure out, but I love to make predictions either way.
Yeah, absolutely. So we are mainly a real estate channel, so I think why not start with the 30-year mortgage rate? Let's call the mortgage rate today 7.1 as of this recording. Where might you see it by the end of 2024? Higher, lower, and if you want, take a swag.
I say that rates will finally come down.
Okay.
The economy is starting to deflate a bit, heading toward recessionary conditions for almost every single sector of the economy. And so I think the Fed will start to cut. I don't think they'll start to do it till probably May, but I think they might cut 75 basis points to a full point in 2024 by the end of the year. So let's call it a 6.1, 6.4 interest rate by the end of next year.
All right. So we take that. I'll go under. I'll go under that. I'll go under 6.1 by the end of 2024. The 10-year note today is at 4.1. It's kind of the same logic. You think it goes lower?
Yes, probably about the same amount. What's tricky here is that the 10-year treasury note has less to do with
Right.
where 30-year fixed mortgages are and
Mhm.
more to do with, interest rates, but also demand for US treasuries from other countries based on what they need, where currencies are, what they want their reserves held in. So it could be that the treasury rates are actually a little bit higher, so they drop less than what the 30-year fixed mortgage will. And also because the 30-year fixed mortgage has that increased spread, like we've talked
Right. Yeah.
about in a prior video, that could come back down to be more normalized. So let's say the 10-year treasury comes down half a point to 75 basis points by the
All
end
right.
of 2024. And
So
this is
three,
all if
four
we
to
don't have
six.
a major recession. If we have a
Right.
major recession, bring those numbers down another half to 0.75%.
Totally agree. Totally agree. We've talked about gold in passing. You and I have had some commodity exposures in our portfolio for decades. Gold just broke 2,000 the other day. I think it touched 2,100.
2100.
Yeah,
Yeah.
it's sitting today at 220.50. I just checked, rounding a little bit. Where do you think gold is maybe by the end of next year if it's 2050 today?
Wow. Gold tends to cycle with consumer sentiment where the economy is. So if people think that the economy is going to really tank, gold is a security. If they think that the world is going to go into global recession or the US world reserve currency is a threat, they tend to buy more gold and it goes way up during harder times. So if we see a deep recession, I think gold will continue to really come out and go up. If things stabilize and we have what, the Fed thinks is going to be a soft landing, then people will shift back into other asset classes, and gold, I think, will probably stay in the 1900 to 2000 range. That would be my guess.
Okay. All right. Let me check the S&P. So the S&P 500, just at, we'll call it the stock market, trading today at 4,550, we'll call it. You think the stock market is up or down by the end of next year?
Absolutely down.
Yeah.
No doubt in my mind. Especially when that recession materializes or recessionary enough conditions.
Mhm.
Barring a miraculous soft landing, typically the stock market, it's way overvalued. And I'm not a stock market expert, but I study enough because I go in at times in little
Yeah.
bits, but it's historically extremely overvalued. And so the stock market experts that I listen to expect about a 30% decrease in the stock
Woo!
market in
There we go.
2024, especially if we hit a deep recession. So I'm
Yeah.
going to go with the experts, not that I'm an expert, but I'm going to say I could see it down 20 to 30%.
There you go. How about, so I think you said earlier, but I'll ask it explicitly. Number of rate cuts next year.
For barring a major recession.
I like it.
Barring a major recession, I think they cut I don't think they're gonna cut a huge amount. I think they'll cut a certain amount and then they'll say, okay, we got to cut a little bit more, cut a little bit more, because they
Right.
don't want to lose face and lose all credibility saying, we still have inflation. So
Mm.
I think that they might start in May,
Okay.
cut once each meeting, unless you have a deep recession, and then maybe it's 6.
Okay. All right. And then we'll close on home appreciation. Of course, we'll take median homes for the country. What do you think median home prices do all of next year?
I'm gonna say they stay fairly flat until we have our first rate cut, and then they start to see some acceleration if we're talking about the average, just because
Yep.
people are gonna be so excited that rates are coming down. I don't see a massive increase, but, I'd say if rates really come down, 1% or 2, let's say they came down 2%, you might have 2%,
Okay.
3% home appreciation would be kind of my guess.
All right. Well, yeah. I mean, if rates go from 7 to 5, a 2% appreciation would be normal appreciation. That's historically right around the
Right.
average for housing. My fear, as we talked in the previous videos, we do something 5x that, which not my call, not my hope. I think that would be horrible, but certainly possible. Any other, I guess, 2024 recession, yay or nay?
Yes.
Yeah, me as well. Any other thoughts on 2024, the predictions or whatnot?
I think I'm hopeful just from what we're seeing. The economy is slowing. So, the good news is that when the economy is starting to slow, inflation naturally starts to come down. And so that's the good news. The bad news is that means an economy that's weakening. And so, based on everything that I look at, all of the coincident indicators that the NBER looks at, the National
Yep.
Bureau of Economic Research that dates recession, other than GDP, Michael, everything is deflating, and
Yep.
many of those signals are already in recessionary territory. And that means I predict that we will have a recession. I don't know how deep or how long. Let's just call it an average recession. And that is going to spark some layoffs. It's going to, put us in the trough for a while. But then I think, the Fed's still going to be very, very cautious to cut rates as drastically as some people are hoping, because inflation isn't yet down to their 2%. And so I think that these lag effects are still going to take some time, right? We've had how many months of no rate increases?
So
2?
far, 5. No, I think it's 4 or 5
5.
at this point.
5.
Yeah.
Okay. So, I think that I mean, it's generally about a year that these lag
Mhm.
effects take to really hit through the economy. So I don't think that we're going to know a whole lot until mid 2024. I see
Okay.
the first half of 2024 being kind of more of the same, more and
Yeah.
more weakening in the economy. I lost you.
Yeah. I think we're
Where
still
did
here. I
I
think
lose you?
you were saying that you were seeing the economy slow down in the second half.
Yeah.
Yeah. So I guess there's one more thing as we close this up. I forgot to ask unemployment. I think the unemployment reading the last I saw it was 3.9. Where do you think that kind of tops out next year?
Yeah, I'm thinking it's gonna be in the mid fours. I think we're gonna see continued unemployment. I don't think we'll hit 5% unless the recession is really deep. And that would generally require something to break in the financial system, the banking system, all of the debt that has to be refinanced. If it can't be refinanced, and you start to see more and more property owners give
Yeah.
back property. Also, this bank rescue program from first
Yeah.
quarter of this year is running out. So unless they renew it, I think you could see some banks start to fail. And so if you see some bank failures and bigger bankruptcies, and more layoffs, then I think that that's going to push us into a worse situation, and then unemployment really could get up into that 5%. But I would say my base case is that we're in kind of the mid fours with a fairly average recession.
Yeah, the last thing I'll say about 2024, I just said it today on the Daily Financial News, is I think it will go down as the year of mergers and acquisitions. I think there's a
Yes,
lot of weak companies, big companies that buy weak ones, the strong who don't need to borrow, they have the balance sheet. I think there'll be a lot of mergers and acquisitions in 2024. How's that feel?
I agree 100%.
Yeah, very cool. Anna, where can people find you?
Great. You can find me here every week on your show. You can find me on social media at Anna Kelly REI Mom. And for real estate investing, consulting, and deal review help, you can go to my website at annakellyinvesting.com.
Thank you so much.